Hello guys, welcome back to my YouTube channel. So in today's video we're going to be learning about top-down analysis. All right, to avoid you entering the trade and the market crashing against you, you need top-down analysis to be able to look at the market from different perspective, whereby you use the higher time frame for direction and the lower time frame for entries. So I'm making this video because someone has actually been persistent and consistent with me requesting for me to actually do a video like this. So what we are going to be learning in this video, we're going to learn how to read the charts, market structure on multiple time frames, like from the monthly, the weekly, the daily, the 4 hours, and then down to our entry time frames. And then you learn how to cover every details on the various time frames so that you won't leave anything aside, and you take note of everything, where to place your stop loss and where to place your profit target. And lastly, you're going to learn the strategy to find the best entry strategy and the best entry technique, okay, to actually use these multiple time frames in your favor. So without wasting much time, let's just dive straight into it. So top-down analysis involves you using multiple time frames, okay, multiple time frames to gain your market bias. All right, gaining an overall the market bias, and then going down to the lower time frames to find your edge to trade in alignment with the higher time frame. So now we look at for you to actually do your top-down analysis successfully, you need the monthly time frame, the weekly time frame, the daily time frame, the 4 hours, the 1 hour, and the 15 minutes, depending on the kind of trader you are. If you're swing traders, you need the weekly, the daily, and so on. So, but for us, the day traders, we just need the weekly, and then the weekly or the daily, and then the 4 hours, and then the 1 hour and the 15 minutes for entry. Sometimes the 5 minutes, depends if you are intending to actually scalp the market. So today, we're going to be using the Euro Swiss francs. All right, let's start from the daily time frame. From the daily time frame, you can see that this market is actually trending to the downside. So you can see this is the daily time frame. We have this market movement just like that. So it means therefore that the market is actually still going down. Okay, so we're gonna be using our simple entry strategy technique for this particular market right here. So right now we're going to scale down to the daily time frame, all right, to try to look for sells. So if you look to the left right here, you can see that we have a sweep of liquidity. Okay, we have a sweep of liquidity here. We have a break of structure, we have a pullback to provide structural liquidity, and then we have our second break of structure right here. So this is a very important area. Okay, that area is very important. So without further ado, let's just clear this and then head down to the smaller time frame, the daily time frame. So down we are now on the daily time frame. We are still looking for buyers. All right, I'm looking for sales. Okay, so on the weekly time frame, that area is very important, but it will take a long time for the market to actually get to that area. So on the daily time frame, looking at this area right here, I cannot see anything really important, okay, other than this bearish candle right here, which signifies what? Strong bearish momentum to the downside. So right now, what I'm going to do is I'm going to scale down to the 4 hours time frame, trying to look forward for sales. Okay, so right here, can I see any setup? Okay, I can't. All right, so even the daily time frame, the 4 hours time frame, this area conforms to what we saw on the daily time frame. All right, so with that, I'm just going to scale down to my 30 minutes time frame. All right, let's see what happened. On the 30 minutes time frame, we just have to look to the left here, or 15 minutes time frame, sorry. On the 15 minutes time frame, we have a setup which has already played out. Okay, we have a setup which has already played out, where we have right here to the left, we have sweep of liquidity, which is this right here, and we have a break of structure, which is this. And within that break of structure, we have an internal structure which was broken, and also which gave us our structural liquidity. Hope you guys can see it. I cannot make it clearer. If I make it clearer, I won't be able to capture all the details. Okay, so let me just see if I go down to the 1 hour time frame, I'll still be able to catch all the details and make it clearer. So yeah, this is actually really better. Okay, so we have a sweep of liquidity right here, and then we have a break of structure to the downside. So we have an internal structural liquidity, and then we have this pullback. I mean, like this pullback here, which gives us a break of, which led to the break of the structure, and that gave us what structural liquidity. So and then we have a second break of structure, and then finally what happened, the market came back and then tapped into that area. Let's just delete the whole thing, okay, and do it rightly. So now look at this area to the left here. You see that we have a sweep of liquidity, right? Yeah, we have a sweep of liquidity there. Okay, so now we have a sweep of liquidity, and then we look for our break of structure. We mark our break of structure. So right here we have our break of structure right to the downside. So since we have our break of structure to the downside, we look for, now we mark our structural liquidity. I told you this pullback gave us what, an internal what, structural liquidity. Okay, so we have that internal structure there before this break. If the market has not taken out this low right here, if the market has not taken out this low, we wouldn't have been considering this particular setup. So right here, you can clearly see that this area right here is my point of interest. You can see how the market went, tapped into that area. Okay, tapped into that area. So that's our liquidity area. See how the market tapped into that area. Here becomes my protected high, and then here becomes my protected low. So you don't have to ride the trade all the way to the target. Okay, it doesn't have to be like that. So here, right here, that's your entry. You see it came with what, a very, very good confirmation right here. You're seeing that confirmation, guys. So you see that. So that's a reason for you to actually enter this particular trade, and then you can just go for a 1 is to see the risk to reward ratio is actually crazy, fam. You see that risk to reward ratio? That's something amazing. It's something on another level. So you need multiple time frame analysis or top-down analysis for you to be able to increase your win rates, and then stay consistent, and then trade in alignment with the trend. So if you're not doing any of this, you're actually trading the market in a wrong way. So now let's look at JPY. Let's see what we have on the Japanese yen. Okay, so on the Japanese yen, I was actually looking at this. So we start with our multiple time frame analysis, top-down analysis. So what happened? What are we looking at here? Okay, from the daily time frame, the market is kind of bullish, all right, but for a while it's been ranging on the weekly time frame. So on the weekly, this market is actually kind of ranging. So since it's a range, we trade it as a range. So what happened? The market came to the lower part of this range, okay, tapped into this this other block right here, tapped into that area. All right, and then what happened now is just pushing to the upside. So you see that it taps into that area and it's pushing to the upside. So I'm just going to go ahead and just delete this. All right, so where are we headed? We are actually heading here. All right, so now we're going to scale down to our daily time frame. All right, so on the daily time frame, what are we looking for? We're looking for structures that are in alignment with our what trading strategy. So on the daily time frame, nothing is actually visible, nothing is clear. So we scale down to a more smaller time frame. Okay, so we go down to the 4 hours time frame. So we are looking for two kinds of setup. Okay, we are looking for a breakout block trading strategy, or the structural liquidity sweep and all of that. So now on the 4 hours, I'm not seeing anything really well, so I still scale on to my 1 hour time frame in order to get clarity. So right here, this is an interesting one. All right, so now I'm actually looking at this. I can see that we have actually verified that, okay, this market is what is bullish, and we are going to be looking for buys. All right, so I've already missed this particular entry, but this is how I would have approached it. So right here we have what a sweep of liquidity. We're just going to consider the whole of this as a sweep, okay, because I think that was equal low, but let me just use this. We have our liquidity sweep. So right here we have our liquidity sweep, all right, so we have our liquidity sweep right there, and then we're looking for breakup structure to the upside. Okay, so now since we have a breakup structure to the upside, now what are we looking for? This is more like what a change of character or a market structure shift. All right, so now we have our market structure shift. So now we have an internal what inducement level, which is this right here. So now this market comes to, we have our internal inducement level, which is that. All right, so which is that, and then now this market comes to this demand zone right here. Okay, so now I don't want to actually be jumping into this, because if I want to buy it from here, all right, or let's say here, my stop loss is going to be so wide. Okay, so I'm going to be risking so much to be able to target this particular area right there. So with that in mind, I'm just going to redefine my trading entry. Okay, so right here, I still wait for the same thing. Okay, I wait for the same thing that we have. Okay, right here. So we have what? We have a sweep of liquidity right here. Okay, you see how clear this is. We have a liquidity sweep right there. Okay, let me just change that because I don't like the color. So I have a liquidity sweep and we have a market structural shift right there. Okay, so now with that, we have a market structure shift which is right there. Okay, that is it, market structure shift. All right, so now we have our inducement level. Okay, so now what happened? Market took out that level. Okay, market took out that level, inducement, and then tapped into this area of interest right here. Okay, so see how the market tapped into that area. So what happened? You have just gone in right here, or go to the 5 minutes time frame or so, and just take it, and then your stop loss just here. All right, and then you target the same area, and then let's compare it now, the weeks to the world ratio. Let's see what's going to happen. So you see this now, stop loss being here, and then targets being there. Let's see. In terms of risk to reward ratio, this is giving you 1:5, and then this is giving you 1:8. So redefining the entry is always better, okay? To redefine your entry, again, you just have to stay focused and then stay consistent, okay? You don't just have to jump into trade. So that being enough, guys, you have actually learned how to actually do your top-down analysis, starting from the daily time frame, from the weekly or the monthly time frame, down to the daily time frame, and down to the 4 hours time frame for. All right, so don't forget to hit the like button and subscribe to this YouTube channel for more and more videos like this. Stay blessed, fam.